Have you ever wondered why some traders build fortunes that last a lifetime, while others lose everything, even with the same charts, the same information, and the same opportunities? Why do some remain calm during market crashes, while others panic at the first sign of uncertainty? The answer isn't hidden inside a secret indicator. It isn't found in a magical trading strategy, and it certainly isn't about predicting the future. The real difference lies in something far more powerful: psychology, discipline, and the ability to survive when everyone else is chasing quick profits. Today, we're going to explore the timeless principles that separated the world's greatest traders from the crowd. Lessons inspired by Jesse Livermore, one of history's most legendary speculators, whose victories and failures continue to teach traders more than a century later. This is not a story about getting rich overnight. It's a story about protecting your capital, mastering your emotions, and developing the patience to wait for opportunities that truly matter. Because in the market, success doesn't belong to the smartest person in the room. It belongs to the one who survives long enough to let discipline, patience, and sound decisions compound over time. If you truly want to think like a professional trader, then let's begin. Every successful trader begins with a dream. For some, it's financial freedom. For others, it's escaping a job they no longer enjoy. And for many, it's the hope of creating a better future for themselves and the people they love. But the market doesn't care about dreams. It doesn't reward ambition, confidence, or hard work simply because they exist. The market rewards preparation, it rewards discipline, and above all, it rewards survival. Every trading career, no matter how successful, begins with a single question: can you stay in the game long enough for your skill to matter? Because before profits come consistency. Before consistency comes discipline. And before discipline comes a lesson that every great trader eventually learns. Your first responsibility is not making money. Your first responsibility is protecting the money you already have. It sounds simple, yet this single principle separates professionals from amateurs more than any indicator or trading strategy ever could. Most beginners enter the market asking, "How much can I make?" Professionals ask a very different question: "How much can I lose if I'm wrong?" That one shift in thinking changes everything. Because every trade carries uncertainty. Every analysis can fail. Every strategy experiences losing streaks. The trader who accepts uncertainty prepares for it. The trader who ignores it eventually pays for it. The market has a way of humbling anyone who believes certainty exists. Imagine a ship preparing to cross a violent ocean. An inexperienced captain focuses on reaching the destination as quickly as possible. An experienced captain focuses on making sure the ship survives the storm. Because reaching the destination means nothing if the ship never arrives. Trading follows exactly the same principle. Your capital is your ship. Risk management is your life jacket. And discipline is the compass that keeps you moving forward when emotions try to pull you off course. The market will always create another opportunity. Tomorrow, next week, next month, next year. Opportunities are endless. Your capital is not. Lose your capital, and every future opportunity becomes meaningless. This is why the greatest traders in history never measured success by how much they made from one trade. They measured success by whether they could continue trading tomorrow. Survival has always been the foundation upon which every great fortune was built. Few people understood this better than Jesse Livermore. He experienced extraordinary success, building fortunes that made him one of the most famous traders of his generation. Yet he also endured devastating losses that revealed an important truth. The market does not only test your strategy, it tests your character. Fear, greed, ego, patience, hope. Every weakness eventually appears on the chart through your decisions. And that is why trading is unlike almost any other profession. It is not simply a battle against the market. It is a battle against yourself. Before we explore the habits that separate professionals from the crowd, we first need to understand one timeless principle. The traders who survive the longest are rarely the ones chasing the biggest profits. They are the ones protecting themselves from unnecessary losses. And once you truly understand that, everything about the way you see the market begins to change. Every experienced trader eventually discovers a truth that most beginners spend years trying to avoid. The market is not designed to reward the person who is right the most. It rewards the person who manages risk the best. That may sound surprising in a world obsessed with predictions, but history has proven it again and again. The greatest fortunes in the financial markets were not built by people who never made mistakes. They were built by people who never allowed their mistakes to become catastrophic. Think about any successful business. A restaurant doesn't survive because every dish is perfect. An airline doesn't succeed because every flight is free from turbulence. A professional athlete doesn't become a champion by winning every competition. Success comes from consistency, from managing setbacks, from improving over time. Trading follows exactly the same principle. One losing trade means very little, but one reckless decision can erase years of progress in a single afternoon. This is where emotions quietly begin taking control. Fear convinces traders to close winning positions too early because they're afraid of giving profits back. Greed convinces them to hold winning trades for too long, hoping for just a little more. Hope whispers that a losing trade will eventually recover. Pride refuses to admit a mistake because being wrong feels more painful than losing money. None of these emotions appear on a trading chart, yet every chart is filled with the consequences they create. That is why professional traders spend far more time mastering themselves than searching for the next perfect strategy. They understand that discipline is not something you suddenly discover after becoming profitable. Discipline is what makes profitability possible in the first place. A simple strategy executed with patience will almost always outperform a brilliant strategy controlled by emotion. Imagine driving through a thick fog at night. You cannot see every corner of the road ahead. You cannot predict every obstacle waiting around the next bend, but you still reach your destination because you control your speed, stay within your lane, and react calmly as new information appears. Trading is no different. The future is never completely visible. The goal is not to predict every turn. The goal is to remain in control no matter what the market reveals next. This is why professional traders never become emotionally attached to a single idea. They understand that every position is temporary, every trend eventually changes, every market cycle comes to an end. Their opinions are flexible because the market is always changing. Instead of asking, "How can I prove I'm right?" they ask, "What is the market telling me right now?" That single question separates those who follow evidence from those who follow emotion. Jesse Livermore built his reputation by understanding this principle better than almost anyone else. During his greatest years, he wasn't loyal to predictions. He was loyal to facts. When the market confirmed his analysis, he stayed patient and allowed his winners to grow. When the market proved him wrong, he stepped aside without hesitation. His strength was never in always being right. His strength was knowing that protecting his capital meant protecting every future opportunity. And that brings us to one of the most misunderstood ideas in trading. Many people believe success comes from constant action. They believe professional traders spend every hour buying, selling, and searching for the next opportunity. The reality is almost the opposite. The traders who survive the longest often spend more time waiting than trading. They understand that patience is not weakness. It is one of the most powerful financial advantages anyone can possess. Because sometimes the smartest decision you will ever make is the decision to do absolutely nothing. And that simple idea changes everything. There is a reason patience is so difficult to master. It goes against human nature. We are taught that success belongs to those who move faster, work harder, and act before everyone else. In most areas of life, taking action is rewarded, but the market follows a different set of rules. Here, the person who acts the most is rarely the one who earns the most. More often, success belongs to the trader who knows when not to act. Every morning, the market opens its doors and immediately creates the illusion that something important is happening. Prices rise, prices fall, news headlines appear, analysts make bold predictions. Social media fills with screenshots of winning trades and overnight profits. It creates an uncomfortable feeling that if you're not involved, you're being left behind. That feeling has a name: fear of missing out, and it has destroyed more trading accounts than most people will ever realize. Imagine standing beside a river waiting for fish. A beginner throws the line into the water every few seconds, convinced that constant activity will increase the chances of success. An experienced fisherman behaves differently. He studies the current. He watches the movement of the water. He understands that forcing the process never changes nature. When the conditions are right, he acts. Until then, he waits. Trading demands the same level of patience. Every movement on a chart is not an opportunity. Every breakout is not the beginning of a trend. Every sharp decline is not a bargain. Markets spend much of their time creating noise. The challenge is learning to separate meaningful opportunities from meaningless movement. That ability cannot be developed through excitement. It can only be developed through discipline. Professional traders understand something that beginners often ignore. Cash is not wasted capital. Cash is a position. It represents flexibility. It represents freedom. It gives you the ability to say no without feeling pressure. When you hold cash, you are never forced into a trade simply because the market is moving. You remain patient until the probabilities shift clearly in your favor. Throughout history, every major market crash has created extraordinary opportunities, yet very few people were able to take advantage of them. Not because they lacked knowledge, but because they had already exhausted their capital chasing smaller opportunities that never mattered. By the time the real opportunity arrived, they had nothing left to invest. The market rewards preparation long before it rewards action. Jesse Livermore understood this lesson better than most. He once observed that the biggest money was never made in the buying or the selling. It was made in the waiting. At first, those words seem impossible. How can doing nothing create wealth? But waiting prevents emotional decisions. Waiting allows trends to mature. Waiting gives uncertainty time to disappear. Every patient decision quietly protects your future, while every impatient decision slowly weakens it. Think about how a tree grows. No one stands beside it pulling on its branches to make it grow faster. Growth happens gradually, almost invisibly, through time. Markets behave in much the same way. The strongest trends are rarely created overnight. They develop over weeks, months, and sometimes years. Yet countless traders lose money because they become obsessed with every small movement between the beginning and the end. They confuse motion with opportunity and excitement with certainty. This is why professional traders often appear inactive. From the outside, it can look as though they are missing opportunities. In reality, they are protecting themselves from unnecessary risk. They understand that not every invitation deserves a response. Just because the market is open does not mean you have to participate. The greatest advantage in trading is not finding more opportunities than everyone else. It is having the discipline to ignore the opportunities that never deserved your attention in the first place. And once you truly understand that, another challenge begins to reveal itself. It is a mistake so common that many traders never even realize they are making it. A mistake that quietly destroys more accounts than bad analysis, bad timing, or bad luck ever could. It is called overtrading. Overtrading rarely begins with greed. In fact, it often begins with good intentions. A trader wakes up determined to stay disciplined. They review the markets, analyze the charts, and promise themselves they will only take high-quality setups. But as the hours pass, something begins to change. The need to stay productive slowly replaces the need to stay patient. Activity starts feeling like progress. And before they realize it, they are no longer trading because opportunity exists. They are trading because they feel they should be doing something. One trade becomes two become five. Every small movement on the chart begins to look meaningful. Every candle feels like the beginning of a major trend. The market itself has not changed. The only thing that has changed is the trader's mindset. Instead of waiting for the market to present an opportunity, they begin searching for reasons to justify entering a trade. That subtle shift is where discipline quietly disappears. Imagine a professional hunter walking through a forest. He doesn't fire at every sound he hears. He studies the environment. He understands the wind. He waits until the conditions are right because every bullet has value. Trading is no different. Your capital is your ammunition. Every unnecessary trade reduces your ability to take advantage of the opportunity that truly matters. The trader who wastes resources on poor opportunities often has nothing left when the best opportunity finally arrives. One of the greatest misconceptions in trading is believing that successful traders are constantly making decisions. In reality, many of their most profitable decisions involve choosing not to act. Every trade you avoid is also a risk you never accepted. It is a mistake you never made. It is a loss you never had to recover from. Sometimes the most profitable decision you will make all week is closing your laptop and walking away. This idea feels uncomfortable because modern culture celebrates constant action. We are encouraged to move faster, work harder, and always stay busy. But the market does not reward effort. It rewards judgment. It doesn't know how many hours you spent studying charts. It doesn't care how badly you want to succeed. It responds only to the quality of your decisions. And sometimes the highest quality decision is doing absolutely nothing. Professional traders understand that every click carries a hidden cost. There is the obvious financial cost of commissions and losses, but there is also a psychological cost. Every impulsive trade drains concentration. Every emotional decision weakens discipline. Over time, decision fatigue begins to appear. The more unnecessary choices you make, the more difficult it becomes to recognize the opportunity that actually deserves your attention. This is why experienced traders create rules long before the market opens. They define exactly what they are looking for. They know where they will enter, where they will exit, and how much they are willing to risk before emotions ever become involved. Rules are not restrictions. They are protection. They exist to protect you from the version of yourself that appears when excitement, fear, or frustration begin taking control. Jesse Livermore understood that the market would always offer another opportunity. He never believed he needed to participate in every movement. Instead, he waited until the odds were clearly in his favor. His patience was not hesitation. It was preparation. He understood that discipline is measured not only by the trades you take, but by the countless trades you refuse to take. The longer you remain in the market, the more you realize that successful trading has very little to do with constant action. It has everything to do with selective action. The goal is not to trade more than everyone else. The goal is to trade better than everyone else. One carefully planned decision will always be more valuable than 10 emotional ones. And yet, even traders who master patience and discipline eventually face another challenge. It is not the fear of losing. It is something far more dangerous. The moment success begins to create overconfidence. Because the market has humbled countless beginners, but it has also humbled many professionals who forgot that confidence without discipline eventually becomes arrogance. And that is where the next lesson begins. There is a dangerous moment in every trader's journey. It doesn't happen after the first loss. It often comes after a series of victories. A few successful trades begin to build confidence. Confidence slowly becomes certainty. Certainty quietly turns into arrogance. And without realizing it, the trader begins believing they have finally mastered the market. History has shown that this is often the exact moment when the market delivers its most painful lesson. Winning can be far more dangerous than losing. Losses force people to become cautious. Success often convinces them that the rules no longer apply. Position sizes become larger. Risk limits become flexible. Plans become optional. The trader who once respected uncertainty begins believing they can predict what happens next. But the market has a remarkable way of reminding everyone that certainty is an illusion. Jesse Livermore experienced this truth more than once. He built fortunes that seemed impossible to imagine, only to watch much of that wealth disappear when discipline gave way to overconfidence. His greatest lessons did not come only from his victories. They came from his failures. Because failure has a way of exposing weaknesses that success often hides. Every morning, the market resets the scoreboard. Yesterday's profits provide no advantage today. Last month's winning streak offers no protection against tomorrow's mistake. The market has no memory. It does not reward confidence. It rewards discipline repeated over and over again, regardless of whether your last trade was a winner or a loser. This is why professional traders never fall in love with their opinions. Opinions are temporary. Evidence is everything. The moment new information appears, they are willing to change their minds. They understand that changing direction is not a sign of weakness. It is a sign of intelligence. Flexibility keeps capital alive. Stubbornness slowly destroys it. Imagine two mountain climbers attempting to reach the summit. One rushes upward, ignoring the changing weather, because he is confident in his abilities. The other climbs carefully, checking every rope, every foothold, and every change in the wind. The first climber may move faster. The second climber is far more likely to return home safely. Trading follows exactly the same principle. The objective is not simply reaching the top. The objective is surviving the journey. One of the hardest lessons in investing is accepting that you will never catch every opportunity. Many people spend years chasing the perfect entry, believing successful traders somehow participate in every major move. They don't. The greatest investors miss countless opportunities. The difference is that they refuse to chase the ones that don't fit their strategy. They understand that missing a trade is far less expensive than forcing the wrong one. Think about a professional baseball player standing at the plate. Every pitch is an opportunity, but not every pitch deserves a swing. The greatest hitters are patient. They wait for the pitch that matches their strengths. Trading requires exactly the same discipline. Every price movement is an invitation, but only a few deserve your attention. The impatient trader swings at everything. The professional waits for the moment when probability finally shifts in their favor. This is why doing nothing is often one of the most profitable decisions a trader can make. Doing nothing is not hesitation. It is not fear. It is controlled decision-making. It is refusing to exchange patience for excitement. It is understanding that protecting your capital today creates the freedom to seize a far greater opportunity tomorrow. There comes a point in every trader's journey when the focus quietly changes. The question is no longer, how much money can I make? It becomes, how long can I continue making good decisions? That small shift changes everything, because wealth is rarely built through one extraordinary trade. It is built through thousands of disciplined decisions made consistently over many years. The traders who survive are not remembered because they predicted every market move. They are remembered because they remained disciplined when everyone else became emotional. They stayed patient while others rushed. They protected their capital while others chased excitement. And in doing so, they earned something far more valuable than a single profitable trade. They earned the ability to keep playing the game. But there is one final lesson that ties every principle together. It is the lesson that transforms trading from a way of making money into a way of thinking. A lesson that reaches far beyond charts, indicators, and market cycles. Because the greatest traders eventually realize they are no longer simply learning how markets work. They are learning how they themselves work. And that may be the most valuable discovery of all. There comes a moment in every trader's journey when the charts begin to matter less than the person reading them. At first, most people believe trading is about mastering technical analysis, finding the perfect indicator, or discovering a strategy that never fails. But time has a way of revealing a deeper truth. The market is not simply testing your knowledge, it is testing your character. Every decision you make under pressure reveals something about who you are. The market has no emotions of its own. It doesn't become excited when prices rise. It doesn't become fearful when prices collapse. It simply reflects the collective decisions of millions of participants. Yet inside every trader, an entirely different battle is taking place. Fear whispers that you should exit too early. Greed tells you to risk just a little more. Hope convinces you that a losing position will somehow recover. Pride refuses to admit a mistake because admitting you were wrong feels like admitting you have failed. These emotions have existed for centuries, and they continue to move markets today exactly as they did 100 years ago. That is why the greatest edge in trading has never been technology. It has never been faster computers or more complicated indicators. The greatest edge has always been emotional control, the ability to remain calm while everyone else is panicking, the ability to stay patient while others are chasing excitement, the ability to accept uncertainty instead of fighting it. These qualities cannot be downloaded or purchased. They must be developed through experience, discipline, and humility. Think about a pilot flying through heavy turbulence. The passengers may panic. They may believe the aircraft is falling apart. But the pilot has trained for moments exactly like this. He trusts his instruments instead of his emotions. He follows procedures instead of fear. Trading requires the same mindset. When volatility appears, professionals rely on preparation. Beginners rely on emotion. That single difference often determines who survives and who disappears. One of the greatest mistakes traders make is believing they must always be certain before acting. But certainty is something the market never offers. Every trade is simply a probability. Every position carries risk. Every prediction can be wrong. The goal has never been to eliminate uncertainty. The goal is to manage it better than everyone else. Professionals understand this. They do not search for guarantees. They search for favorable probabilities while protecting themselves if those probabilities fail. This is why humility is one of the most valuable qualities a trader can possess. Humility allows you to admit when the market has changed. Humility allows you to reduce risk when conditions become uncertain. Humility allows you to say, "I don't know," instead of pretending certainty where none exists. Ironically, the more comfortable you become admitting what you don't know, the better your decisions become. Jesse Livermore understood that markets were constantly changing because people never stopped changing. Fear and greed simply wore different faces in different generations. Technology evolved. Companies evolved. Economies evolved. Human psychology remained remarkably consistent. That is why the lessons from a century ago still apply today. Markets may move faster, but human nature moves at exactly the same speed it always has. Eventually, every trader reaches a point where they stop asking, "How do I beat the market?" and begin asking, "How do I become the kind of person who consistently makes good decisions?" That question changes everything, because success is no longer measured by today's profit or loss. It is measured by the habits you build, the discipline you protect, and the mindset you carry into every decision. The market will always be there tomorrow. Another chart will appear. Another headline will dominate the news. Another opportunity will eventually arrive. But none of those opportunities matter if you have already exhausted your capital, your confidence, or your discipline. The greatest investment you will ever make is not in a stock, a currency, or an index. It is in the ability to think clearly when everyone else is overwhelmed by emotion. And perhaps that is the greatest lesson Jesse Livermore left behind. Wealth comes and goes. Markets rise and fall. Winning streaks begin and eventually end. But the trader who learns discipline, patience, humility, and emotional control carries those assets for life. They become advantages that no market crash can erase and no economic cycle can take away. In the end, trading is not really about predicting the future. It is about preparing for it. It is about protecting yourself during uncertainty so that when opportunity finally appears, you are ready, not because you guessed correctly, but because you survived long enough to take advantage of it. And that is the difference between someone who simply trades and someone who builds a lifetime of success in the markets. Throughout history, every generation has searched for the secret to success in the markets. Some believed it was hidden inside mathematical formulas. Others searched for the perfect indicator. Some chased faster computers, more information, or more complicated strategies. Yet when you study the lives of the greatest traders, one truth becomes impossible to ignore. Their greatest advantage was never what they knew. It was how they behaved. Jesse Livermore understood that markets would always change. Companies would rise and disappear. New technologies would reshape the financial world. Entire economies would transform. But one thing would remain remarkably consistent: human nature. Fear would still tempt people to sell at the worst possible moment. Greed would still encourage them to chase prices after the opportunity had already passed. Hope would still convince people to hold losing positions long after logic had disappeared. And pride would continue preventing countless traders from admitting they were wrong. Markets evolve. Human psychology does not. That is why lessons written more than a century ago remain just as valuable today. Every chart may look different. Every market cycle may feel unique. But behind every movement are the same emotions that have always driven financial markets. Those who learn to understand those emotions gain an advantage that no indicator can ever provide. If there is one lesson repeated throughout every chapter of this journey, it is this: protect your capital. Because capital is more than money. It represents time. It represents opportunity. It represents freedom. Every dollar preserved today creates possibilities tomorrow. Every unnecessary loss removes options that may never return. That is why professional traders protect their capital with the same determination that entrepreneurs protect their businesses and athletes protect their careers. The market will never stop offering opportunities. Tomorrow there will be another chart, another breakout, another headline, another prediction claiming that this moment is different. The question is not whether opportunities will exist. The question is whether you will still have the discipline, the confidence, and the capital to take advantage of them when they truly matter. Success in trading has never belonged to the smartest person in the room. It has never belonged to the person with the most indicators or the loudest opinions. It belongs to the person who remains calm while others become emotional. The person who stays patient while others become impatient. The person who protects their future instead of gambling it away for temporary excitement. There will be moments when the market rewards patience. There will be moments when it rewards courage. The wisdom lies in knowing the difference. Courage without discipline becomes recklessness. Patience without preparation becomes hesitation. The greatest traders understand that both qualities must exist together. They wait when waiting is required. They act when action is justified. And when they act, they do so with complete acceptance that uncertainty will always exist. This is why trading becomes much more than a financial skill. It becomes a lifelong lesson in discipline. It teaches humility when confidence grows too large. It teaches patience when the world demands speed. It teaches emotional control when fear and greed compete for your attention. Over time, the market shapes more than your account. It shapes your character. Perhaps that is the greatest reward of all. Long after individual trades have been forgotten, the habits remain. The patience remains. The discipline remains. The ability to make thoughtful decisions under pressure becomes part of who you are. Those qualities improve not only your trading, but every important decision you make throughout life. So the next time you open your trading platform, remember that the market is not asking whether you can predict the future. It is asking whether you can control yourself, whether you can wait when everyone else is rushing, whether you can protect your capital when others are chasing excitement, whether you can accept being wrong before a small mistake becomes a disaster. Because every great trader eventually discovers that mastering the market begins by mastering the person looking back at them in the mirror. The market doesn't owe anyone success. It doesn't reward hope. It doesn't reward effort alone. It rewards preparation, discipline, patience, and sound judgment repeated consistently over time. Those qualities may not produce overnight wealth, but they build something far more valuable. They build longevity. And in the world of trading, longevity is the foundation upon which every lasting fortune is built. So remember the lesson that has echoed through Wall Street for generations. There are old traders and there are bold traders, but there are very few old bold traders. Survive first. Learn constantly. Stay humble. Protect your capital. Let patience become your greatest advantage. Because the traders who endure are not the ones who chase every opportunity. They are the ones who recognize the few opportunities that truly matter and have the wisdom to be ready when they arrive. Thank you for watching. If this documentary gave you a new perspective on trading psychology, discipline, and long-term success, consider subscribing for more in-depth documentaries on the world's greatest traders, investing principles, and timeless financial wisdom. Until next time, stay patient, stay disciplined, and remember, the market will always create another opportunity. Your job is simply to make sure you're still there when it does.